The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day is Telix Pharmaceuticals. The global biopharmaceutical firm has posted a profit of $29.7 million for the first half of 24, reporting a loss of $14.3 million in the same period last year. Gross margins for the company improved 66% as the selling price for their prostate cancer imaging product stabilised. And the company followed what it says is disciplined cost control. It has reaffirmed its full-year guidance to be between $490 and $510 million US dollars. So, where does that place the company? And I was just taking a look. In fact, there was a bit of a review in the Fin today from some fundies who are saying those stocks perhaps that are looking a little expensive at the moment. And Telix made that list, now trading on what was, before this result, 78 times, and making the comparison that Apple's on 35 times. So, interested to see what our experts think then. Nathan, let's start with you. What do you think?
Look, I think I'm actually was working at a firm that floated Telix. And I remember the analyst who was covering it at the time. He was actually pretty good. And he told me they're going to come up with pretty good updates for the next couple of years. And they're going to have new products coming out. This is a growth story. The market's not going to appreciate the whole growth outlook till they do. And I think it was like $1 something. And we're talking about now nearly $20. So yeah, they've done well. If you've been there, you've killed it. There's a few stocks like this. I mean, I'm a huge fan of the biotech sector. It's one of those areas where you get big risk, big return. Telix, Promedicus, and then you look at Clarity to a certain extent, similar to that. They've all been massive winners, huge runs. And it's almost impossible for people to value these things. Yes, multiples are high. Yeah, in a weird way, growth stocks, you want high multiples, but you want that space. So the thing about biotechs is they're in unique space. There is a moat. And when they do have treatments or potential treatments, that opens up blue sky. So that's the upside to it. The downside is you're still paying a lot of years of growth already. So multiples are high because you're paying well into the future. And if something goes wrong, everyone tries to get out. So that's the risk return in these kind of stocks. I think Telix is a really good stock. If you're there, you hold on to it because they're executing. I'll say the same thing about Promedicus, and I'll say the same thing about Clarity. They're doing well. They're executing as they said. Yes, the market expectations tend to get a bit ahead of itself, and then it gets pulled back a bit, and then generally goes along with that. Till something goes wrong, you want to be in these stocks. But I can understand investors, it's just too hard when the stock has run so far to say, oh, look, I'll get in now. And that's just psychologically too hard. So if you're there, I'll be holding. I think new money, it's just too hard. If you're going to invest these kind of sectors, you want to pick them early and stay for the ride. And if you're there, hold on.
All right, but as you say, if you've missed out, then perhaps you just better move on. But also taking your point there, it all goes well until something goes wrong. You want to try and get ahead of that, don't you?
Yeah, but you're never going to pick that. And the reality is in these kind of stocks, if you've been in the ride, and that's why you want to be there early. So you get that buffer. So if you lose a couple of bucks, it's not going to worry you. But if you got in at 16, 17, you lose a couple of bucks, you're going to panic.
Yeah, good point. All right, Kai, what are your thoughts?
Yeah, pretty much on the same line of thought for Telix. It's such a growth stock. The market, addressable market is really huge on these. But given where the analysts were pricing it, basically they released their earnings yesterday. It pretty much was on the upper side of the guidance, but I think the market was just expecting a lot more. If it beats these expectations, we can just see the blue sky growth, like as Nathan was saying. What was a good example this week was WiseTech. It beat by about a couple of percent, 4 or 5%, in terms of the EPS, and it just it kept going up 20%. That growth potential is there, but basically, if there's anything that goes wrong, the market is the valuation for this stock is pretty high. So you are exposed to the downside. We like Clarity as well, but yeah, I think if you're already in it, it's definitely a stock to keep in your portfolio, but be aware of the risk.
So that is a double hold for our stock of the day, Telix Pharmaceuticals.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.